Are you interested in what's going on with the real estate investing world in Wilmington, Jacksonville, and in between here in southeastern North Carolina? If so, you're in luck. We're sitting down today with my good friend Schuyler from Cedar Ridge Management to talk about rental trends in the area and his predictions for what's going to happen in the next few years. If you find any value out of this video, please like and subscribe, and we look forward to producing more content for you. Schuyler, thanks so much for sitting down with us today.
Yeah, of course. You're welcome. Thanks for having me out.
So before we get into kind of some local trends for what's happening in our area, can you tell us kind of where Cedar Ridge Management came from, for those who don't know?
Yeah, so we are a locally owned property management company by investors for investors. We started in 2017, technically as like my asset holding company when I was going to start scaling a rental business for myself. Mm-hmm. And because I was that guy that was always talking about real estate with his friends, I helped my friends buy some stuff, and then they needed help managing their properties. So my wife started managing for them because most managers are subpar. So she started managing properties for people, Avery, my wife, and just kind of built. In 2021, we decided to get out of the Marine Corps, and I didn't want to work for anybody. So we put our heads together to figure out what we could do, and we thought that we could build a management company because there's a lot of need and room for growth. It's not, managing properties isn't rocket science. Mm-hmm. It just takes somebody that has integrity, that is an investor themselves, so they know what decisions need to be made, and they can do that time and time again. So Avery was managing 7 properties in 2021, and we've added consistently 5 a month since then.
That's awesome. Yeah. Congratulations.
Thanks. It's been a lot of fun.
Yeah. So what is like some of the trends that you're seeing kind of in our local market here? So, well, first off, where does your company like manage properties? What's your area?
We manage from Swansboro, North Carolina, up to like Richlands, mm-hmm. and then down to Wilmington.
Okay.
And it's like, picture that circle.
Yeah, absolutely. And so what are kind of you seeing in the long-term rental market? I know there's lots of sub-markets in there, but like kind of Jacksonville, Wilmington, and then like the coastal area where we're at now, Holly Ridge, Sneads Ferry, Hampstead.
Yeah, so this is a really exciting time to be a real estate investor.
Why do you say that?
Because this is, if you're investing now, you're an investor. If you started investing from 2011 to 2019, you were gonna be successful if you didn't buy something that had homeless people living in it and that was just like obviously bad. Mm-hmm. The mortgage rates were cheap, rents were appreciating, asset values were appreciating. You were going to be successful. Mm-hmm. Now you cannot be successful unless you buy a quality property at a good price. Mm-hmm. And it's not easy. You don't have prices that are just going up like crazy. You don't have mortgage. You don't have debt that's really cheap. So that's why I say this is a really exciting time. Because this is where the professionals are going to shine. You have to like get better at your investing skills, mm-hmm. and when you get better at something, you get better at it, and you accomplish more. You help more people out. So it's fun.
Cool. So can you tell us a little bit about our 3 local markets here, Jacksonville, Wilmington, and then why don't we call Sneads Ferry, Holly Ridge, and Hampstead the Tri-Cities?
Cool.
What do you think about that?
Tri-towns, maybe?
Tri-towns. I like that. You heard it here first.
Yeah. Tri-towns, Quiet Waters Realty Group. So Jacksonville. Jacksonville is a great market. Jacksonville's what I would say a mature market in the area. So what I mean by mature market is that it's not going up and down a lot because of new building supply.
Okay. Mm-hmm.
So rents are pretty stable. 3-bedroom, 2-bath is going to be renting for about $1,500 depending on like the specific type of property.
Okay.
And like the amenities, how nice it is. Something really cool though about Onslow County right now is that Section 8 housing is renting for a 3-bedroom house is renting for $17.66.
Wow.
Which is drastically more obviously than just the normal market 3.2. So that's really cool. So that's Jacksonville. You're looking for days on market right now between 15 and 30, depending on your property type and what you do to make it rent ready. One big change that applies to all markets today is that you have to do a good job making something rent ready and doing turnover work. Like you can't have 7 years of patches on your walls with different shades of off-white paint, making it and calling that ready. It has to be a fresh coat of paint that looks good to attract tenants because there is a lot more product. So that's Jacksonville. Now we have, I'll talk about Sneads Ferry, Holly Ridge, and Hampstead.
Tri-towns.
The Tri-towns. There is so much building supply that is hitting the market right now.
Yeah.
So we were raising rents consistently from 2017 to 2023, end of 22, beginning of 23, and then all of the projects that you saw break ground during COVID have started coming to market. So you have more apartments in Sneads Ferry. You have a lot of apartments in like South Hampstead, Scotts Hill being developed. You have 3 pretty big townhome complexes in the Sneads Ferry, Holly Ridge area that have come on market. You have another big apartment in Sneads Ferry. You have low interest rates. So that's one part of the supply. The other part of the supply is low interest rates for the last really 10 years historically, and super low from like the last 5 years, that you have smart people knowing that I'm going to make money if I rent my place out because I have a 2.5% mortgage rate.
Yeah.
So you have so much more rental supply right now than you've ever had in that Tri-Town, Sneads Ferry, Holly Ridge, Hampstead area, that vacancy is high. You have to make your place a lot nicer, and rents are going down slightly.
Yeah. What are some things that your company does before we get to Wilmington to, go above and beyond, set yourselves apart from the other property managers and try and, attract the top quality tenants?
Yeah, great question. So I'd say first, it's education on what to expect in this market, because just an education on what to expect in this market. People are really hurting right now that bought something within the last 6 months and thought they were going to get peak 23 rental prices for it. They're also not putting as much money down, and those people are really feeling it. So I'd say first thing we do is education. Talk about what your property can rent for, and then like an education projection or like a investment projection. So at this price, it's going to be vacant for this many days, and this is probably going to be your annual income from that. At this price, we're going to get leased in this many days, and this is how much money you're going to make. And we pick that sweet spot. And because I'm an investor, because my property managers are investors, we make decisions to make our clients the most money over the long run, even though that might mean a shorter rental amount than what you see on Zillow.
Okay, yeah. Tell us about the Wilmington rental market. I know Wilmington's grown a lot in the past couple of years, is continuing to grow in terms of like population, median annual incomes. Like it's a growing city. So what's it look like on the rental market there? Yeah,
so Wilmington's more mature than Hampstead, Holly Ridge, Sneads Ferry, obviously. But experiences just a little bit more volatility from a rental income standpoint than Jacksonville's going to. So because Wilmington's bigger, think of like the heart of Wilmington is like the mature part that really isn't going to change a whole lot because it's been there for a while. As you get on the outsides, you're going to experience a little bit more of the less demand, and you got to be better with your product. You're going to have slightly higher lease times, and you're going to experience the supply demand struggle as all of these new things get built, because where are they building new things? On the outsides of town.
So where do you think we're going to go from here? Where it's kind of like, just to summarize a little bit, like a stale rental market in a sense, where we're not seeing a lot of rent increases. Do you think that is going to continue for the foreseeable future, or what do you think is going to happen kind of on that front?
Yeah, good question. So based on what we've experienced, based on all of the building projects from living here that I see happening, rents are going to be stagnant for a while. I don't know how long. I personally hope they're stagnant for longer than shorter, because that means as a professional investor, you have more opportunity, which I think is really, really cool. For how long, I don't know. I know that I'm not an economist. I got lots of thoughts and opinions about stuff. Because of the money supply that was thrown out there during COVID, if you have cash, you're losing. If you're not buying things of value, you're losing. But you got to be smart now, because that initial boom is over. But we're still experiencing it, because wages are typically the last thing to increase in like an inflation crisis. And now one reason rents have stopped going up is because people can't afford stuff anymore. They're making $14, $12, $13, $14, $15 an hour, but the rent price is now 50% of their income versus a third of their income. Qualifying people has become a lot more difficult because of that. They're just not making as much, and prices went up so high from 2019 to 2021.
Yeah, no, I agree with a lot of what you're saying. I think with all the money that was pumped into the economy, the values were inflated maybe, and a lot of people were expecting the property values to drop around here, but it's really interesting to see what's happening, because one would expect that with the interest rates that went up so much, but really we're seeing property values continue to climb, not nearly as much as they did over the past couple of years, where we saw 20 or 30% price increases in a year. Now it seems like it's moving back to a more regular kind of like 3 to 5% appreciation per year. But I think what's holding the values is that there's so many people wanting to move to North Carolina, and the population is growing, and there's just not enough houses for everyone, hence all the building and in development. But what would you say to maybe someone who's like a new investor who's wanting to like get into real estate investing, maybe younger person who works, a full-time job but wants to invest in real estate in this market?
Yeah. So first I'd say build your team. If you're watching this, call Sean or somebody on Quiet Waters, because they are real estate investors, and you don't want to work with somebody that's not doing it. Next, you need to find a property manager. If you're not going to self-manage. So if you're out of state, and the next thing would be to call me, or whoever Sean recommends.
It's you.
And then start educating yourself. Don't take what Sean says as just gospel. Don't take what I say as just gospel. Challenge what we say, read about it, and make an informed decision, so you can ultimately be responsible, because you are. And if you're looking for a book to read, I would recommend reading The Small and Mighty Investor by Chad Carson. It's the best single source, comprehensive real estate investing book that I've read, and I've read a ton of them. It's just a really good book.
Cool. Yeah. And you mentioned the Section 8 strategy. Like, what other maybe strategies you think would work, for a new investor? Yeah.
So get familiar with Section 8, or partner with a property management company that's familiar with Section 8. Look at off-market deals. I was watching a video today by a guy, I forget the book he wrote, but he's like the godfather to real estate investing books, like Chad Carson's book. And he said he's never used a mortgage from a bank to invest with. And he invested, so like people are scared about this, 7% interest rate. In 1981, the mortgage rates were 16.25%. So we've been here and beyond. If we sit at 8% for the next decade, it's still great. Like we're still, if you look at like a mortgage graph, from the 6, 7, 8%, that's where we were from like the 90s to 2008. And people thought it was low because we came off of 12, 13, 14, 15, 16%. So I would say learn how to evaluate a rental property and learn how to finance things without a traditional bank. So another great strategy is house hacking. It's something that I've done. So I'd say from like a wealth building perspective, one of your biggest expenses is going to be your household expense. So if you can turn that into an investment, or if you can remove that and then invest and save those dollars, you're going to create wealth a lot faster than if you're spending $2,000 a month on a mortgage. And the cool thing about house hacking is that you can pay more for a property. It's easier to get into because you have to live somewhere and you're going to buy something. So you don't necessarily have to get that off-market deal for 30% below market value that just needs the paint job and is like the investor dream. You can buy something that's on the MLS in a good area at a fair price and win and win greatly. Because when I house hacked, I also house hacked, by the way, while I was married. So it's doable out there for all you couples. You just got to have the right person. But yeah, so I bought a house. I personally, and I wouldn't do this again, but I bought it on a 15-year mortgage.
Okay.
Because I wanted to force myself to pay the principal down faster. And I had a roommate with me that lived in one of our rooms. I obviously had a roommate. Her name was Avery. She's my wife. And then we had somebody living in, renting a bedroom. He lived with us for about a year, and then we actually had a family move in with us for about another year. And when I got I had a number on my mortgage balance that I wanted. And once I got my mortgage balance to that number, I refinanced into a 30-year fix, and now I'm cash flowing $800-900 a month on that rental.
Yeah, very cool. And so did the rent from the roommate cover some or all of your mortgage payment?
Just some of it.
Okay, yeah.
Because I was on a 15-year mortgage, so it was a higher anyway.
Yeah, nice.
I think I was charging like $500 for a normal sized bedroom.
But it's $500 that you would be spending on your mortgage payment that you can then save or invest elsewhere. And that room would have just been sitting there empty. I mean, very cool. Yeah, I love house hacking as well. Cool. Well, Schuyler, thanks so much for sitting down. I love talking to you about this stuff. We will definitely have to do this again soon in the next couple months as we see some more data emerge. But if people are interested, maybe they're tired of self-managing and are looking to talk to, and potentially partner with a property manager here, where can they find out more information about you and your company?
Yeah, so they can go to our website at cedarridgemanagement.com. Really cool plug, actually. If you want a free rental analysis that gives you a bunch of comparables and an expected days on market, just click on the service tab on cedarridgemanagement.com and it'll get you that rental analysis report.
Cool. Well, thanks so much for your time today. This was fun.
You're welcome.